Good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for the evening of Monday, the 27th of March, 2023. So the event today was no bank issue. That's it. Nothing else. Tomorrow we're going to have hearings to take place about what's caused this. Congress is going to ask, I hope, strong questions. And what prevents the next one from happening? You know, we keep hearing about commercial real estate. What are they doing to protect it? What about bank stress tests? Where are we on all this? How did the regulators miss SVB, Sovereign Bank? I can go on and on. The good news is some people stepped in this week. First Bank shares, I think it's First Capital, and they bought a chunk of SVB, and the market rallied rather dramatically after that, and it was a sigh of relief. But we're not out of the woods. This is a fragile system. The patient got better, sat up in bed, but it's not walking yet. Yet you want the patient to pick up and doing the jogs, and people just plowed into stocks as though that's the case. Okay, please remember, the Fed isn't through. You may think so. The naysayers think so. I don't think so. I don't think we're anywhere near 6% inflation yet. Let me see the readings. Prove it to me that it's running down. Prove to me that labor has weakened and wobbled to the point where the Fed can finally say, we're seeing finally that tunnel is starting to gradually make its move to the downside. Then I can join in. But why would I join in until it's happened? And this is March. There's a whole lot of things going to happen over spring markets. Okay. By the way, before I get going here, we're going to cover Disney. If you like what I do here, please give me a thumbs up. It helps us with the algorithms, gets more people to our station. They pick up on this at YouTube and other places, and it really helps. So Disney today comes out. They're going to let off 7,000 people, and the stock goes up 1.5, roughly, 1.64%. You know, it's a shame that that's what it takes, but what it takes is Bob Iger getting to the bottom line. 7,000 people's a lot. Over the next 4 days, unfortunately, there'll be a lot of people that are going to be called into offices by the head of their divisions and be let go, and then there'll be another tranche of it probably in a week or two. And they'll do another 3,000 to 4,000. So they'll get this all done. That'll sink into the bottom line. There'll be a capital hit because you pay these people severance and so on. Can you imagine what happens with their unemployment insurance? I mean, you know, these are things that happen through here. I went in, by the way, and I did enjoy John Wick over the weekend. Saw it. What a violent movie. Oof. I like the other ones a little better. They had a storyline. There is no storyline here. This is 3 hours of nonstop killing. When you take a look at the marketplace, we're sort of hanging in here in Disney with a pattern of what? Well, you do have higher lows and higher highs. That's bullish. But where's the market in moving averages? You're under the 18-day average, and notice where it rallied to and stopped, right at the 18-day average. So the bias is down, the trend is up, and that's often called what? A bear market rally, and now the market's got to prove itself. Now, if it closes over 95, 92, that would give it bullish bias. Where's the next resistance? Excuse me there, comes in layers, 97, 90, what is that one? 97, 94, and then the one after that, 187, the 100-day average, and the 2. What about the Bollinger Band? That's probably going to drop under the 200-day average tomorrow and make a race in between that and the 100 in very fast order. So your resistance points are going to drop down. So I'm not as enamored as many thinking you're just going to pop and keep going here. I see a lot of resistance points coming in on the chart. Momentum is not overbought, so that's got something going for it. So I'm hoping you get to follow through and it proves out to be the way that I'm saying. When you come to Schwab, it got a bounce, but this has not been a very good piece of action. Now, what's happening is the 18-day average is falling every single day. The market's not proving that it's able to mount a big assault to the downside. This today was something of a relief rally, but it is a 3% rally. That's not a little bitty part. And I think you got short covering starting to come into the market. Wouldn't surprise me. I don't think you're going to get back down here without a banking crisis. So I think it's now time that you very quietly start pulling in something out of that. That would be what I'd be telling my clients. I'm not telling you to do it, but that's what I'm telling my clients to do. In UGA, higher lows, higher highs. Okay, We got over today the 200-week average. One time over doesn't prove anything. We've been here, we did this before, and we fell back. Here's what I think. Until the market gets back under now 56.91, the bulls are wrestling control of the market. I think the play is on that you're not going to get back under these lows. I said that before. Over here, you rallied nicely. That fell back to about that low, right in the ballpark. And I don't think this low is going to be able to get much under that low. I'll go on record saying that. And I do think you're headed up. On the futures, I'm looking in the 280 area in the gasoline prices. In Tesla, too overbought for my cup of tea. I was with my buddies this weekend. We were out in one of theirs. I have a friend who's already had 3 of these Tesla S's, and he gets the one, not the plaid, but everything under it. Loves the car. He'll never give up on it. And he's a tech freak. He's one of the guys that developed LED lights and took it into the big commercial space. Huge company, and one of my good friends. And we went out, we were laughing. I haven't seen him in 6 months or so. And went out in the car. It was fun. Just a lot of fun. These cars are great, and he's a design guy. I explained what I think about the design. He understands, but he said it's so simple. It's like a Porsche. It just is what it is. And he said, accept that. And he's a better designer than I'll ever be. Higher high, lower low, embedded. No. I like the short side of XLF. I think XLF is one of these markets that can still come down. I'm very wrong and would tell you to come out if the red line closes over 21. But at this point, one day to bounce doesn't prove too much as I see it. In XLI, too oversold for me to tell you to go short. Plus, the first challenge of the 200-day average, like that. The pros looked at it. They come at those numbers. Always learn to work with moving averages. It's super, super important. Now, we look at where the SOX is fighting its battle, and as you can see, it's all the way up here fighting a pretty good battle. We'll see what it does. The last break low in the market here was 422.78. You didn't take it out today. If you do, you're probably going to go down to the 18-day average to fight a battle there. You cannot get a sell signal the way I teach charting by taking that out. You would have then a lower low but a higher high. What the market is doing is correcting an overbought condition. In the home builders, I was talking to my brother-in-law just maybe an hour and a half ago, and they are on the west coast of Florida, and they're building a nice home for themselves. So I said, well, what's going on? When is the builder starting? He goes, great question. We go to a meeting. I guess they were from Coral Springs. Their offices got destroyed with the last storms. And he goes, they're supposed to start in April. I said, suppose. I said, I lived in Florida. Let me tell you about Florida workmen. The worst in the world. They give you times, they don't show, they don't call, they don't do things. I pray this contractor's got a good crew for you. Higher high, lower low. I had a miserable experience with work people there. I had to bring in people actually from Chicago. I made contacts with people down there because the work ethic was so different. In XLE, higher highs, well, yeah, and a lower low, not really doing anything in energy. And in the gold, well, now, tomorrow's going to be a crucial day in gold. If you get a reading under 79 in the slow stochastic, you're probably going to make a run for this band. You have to go up immediately from here to prevent that from happening and do it by the close as well. We'll see if it does it. In SLV, I like this market better. It's a much stronger slow stochastic reading than the golds. We'll see if it can run and get back to the Bollinger Band or not. In the copper market, I think if copper can clear out the 37.39 level, I get very friendly copper. Very friendly. But it's got to prove it can do it. Right now it's fighting the 100-day average in green, 37.05, and the 18-day average, 36.91. TLT. So now the market says, banking problem over. I'm going right back to what I did, and I'm going to put out what? I'm going to put on the board some more premium, and that's what they did today. They started to add a premium back in. I didn't pay attention to the 2-10-year. I want to see what it does. Remember something that happens. The 2-10-year first goes out, and the curve yield goes crazy. It goes this way. When you're going to enter a recession, before it happens, I hate to tell you this, it goes this way, which is just what it did. It went from 107 down into the low 40s. So you can get a little bounce here, but I'm very fearful of that. I mean, that history shows that's the prelude to getting into a recession. Recession doesn't have to be deep with this kind of labor market, but it's something to think about. And a bigger thing you got to think about is corporate earnings coming up soon. They have not been hurt so far, but as the banks tighten, there's a lag effect. You don't have a lot of your corporations yet having their meetings with them. When they do, we'll see what happens. The big corporations have their lines set up. It's the medium-sized companies. In the meantime, lower highs, lower lows, still bearish on UUP. FXE, too overbought in my opinion to get overly friendly, that market. So you put it all together, you try to come up with a game plan, and I have one for you. We'd like to give you free access to our morning ETF Spider subscriber video. It's simple. Just move up here, move your cursor. It will say free offers. To click it on, sign up, and we'll be happy to give it to you. I'm Ira Epstein. You have yourself a great evening. I'll see you first thing in the morning.